less. How's that? Am I audible? Is everybody back? Okay. Right. Audible? Perfect. Ready to go? Okay. Great. Yeah, Mr. Singh, we'll discuss it after that. Okay. Breakout can happen any day, right? From that day, can we take the next one? Absolutely correct, Manju. That's correct. Whenever the breakout is happening, we are taking it. We're not timing it or something. Good job. Okay, so we are done with this. Now it's time for the strategy number 2. Let's learn everything about it. Okay. Okay, so let's start with that. Few people having audio issues. Is the audio fine now? Can you please again confirm? Sorry about that. Can you please confirm? I mean, a couple of people are saying there is no voice, no audio. Okay. Okay, it's there. We are having audio. Okay, you're having audio. That's fine. So one person may be having an issue. It's clear. Okay, great. Great. Okay, so let's learn what do we have here. So this you're gonna get. So here we are. Now you see at the bottom, strategy number 2 is what I'm going to click. This one. So what do we have in this? Before we start, I want to show you the recent 10 trades, how it went. To our surprise, all the trades which we took made us good amount of money. 4 to, I'm sure mutual fund people will not like us, right? Or these HNI is not a problem. I'm talking about these funds, big funds, not gonna like retail people making that kind of money. When we go aggressive, the same way we make even better. 8%, 8, even made 10%. 4, 4, 4, that's good. And if we go wrong, not much to worry. This is head strategy, really ultra superior. But before I start, I want to tell you, strategy alone has no power. That's a very low IQ way of thinking for people who are completely untrained. Strategy alone is nothing, worth nothing. It's strategy in combination of certain things, which has all the power, the entire firepower which we need. So exactly what the complete method, exactly what we're going to learn. So really concentrate, laser focus for next 1 hour or so. Complete dedicate to yourself. Before you become a profitable trader, you got to learn to become a really good student of a subject, the best. And I will ask you questions after that. How much you learn, what do you learn? I'll ask you some crazy twisted questions. So make sure that you pay full attention. 50% is me, 50% is you. Completely ready, and let's learn everything about it. It's gonna be interesting, very, very interesting. Here we go. Strategy number 2. Uh, traders' failure rate is extremely high because everybody is doing the same thing, which is good for us because we do something different. So if 95% people are losing money, then who are those 5% people who are making money continuously? Well, they exist. It's just their methods are different, and you're gonna get one of that method today. Some trade works, some trade don't work. You will have solution to that in 40 minutes. Concept of VIX. Let's go to VIX now, and let's understand. everything about it. Before that, I have a good question for you. Now, what you see, guys, on your screen is option chain, right? This is basically a bazaar of options. What do we see? That buyer and sellers are trying to negotiate the best price. They are trying to make a deal. That's what they are doing. It's just pricing, but actually these are people, right? So this is 46,000 people are here, 25,000, or some people have more than one contract, so even lesser. But that is what is happening. That's the representation of the entire market of what's happening in the December contract. Now I want to ask you one thing, something which is very, very important for me to know of you, and that is we see open interest, we see volume, we see everything happening here. But look more deeper, go more deeper. I want to ask you that if somebody asks you, you are an option trader, it's your business, you're doing full time or part time, doesn't matter, but it's your business. If somebody asks you, what do you do an entire day looking at the screen? What do you mean by option trading? What will you tell? What will be your answer? Because our success is hidden in that answer actually. Question is very simple. If somebody asks you, what do you do? What do you mean by option trading? What do you do all day? What will you answer him? Please type your response and tell me, what do you do all day? What business you are in? Please type and please tell. We are a business of eating theta decay, and theta will decay. That's how we get profit. Okay, so somebody asks you, what do? You say that you are into business trading. That's fine. There's no wrong answer. Saying volatility. Okay, what do you mean by that? Just looking at this, just looking at the screen. If somebody asks you, what do? You say, look at the screen. Okay, maybe more precise. All things affecting my MTM. All things. So basically, you say, I look at all things. Business of making money patiently. Yeah, elaborate. Go a little more deeper. Like little more. Give me like the answer. More analyzing the chart. Okay. Again, theta decay premium flow of the market. So somebody asks you, what do you do? What do you mean by option trading? You say that you do theta decay, theta will decay. That's a fair enough. That's not a wrong thing. That's fine. I watch more people are trading. Somebody saying open interest. So somebody say, what do? You say that you do open interest. Nifty chart, looking at the support and resistance and open interest. So how do you make what business you are in? So you say that I'm doing support resistance and I'm looking at the open interest to help me. That's what you say. Okay. Very interesting. Again, theta decay has come. So you sell far call, far put, and that's how it will. Okay. Same approximately. I'm an intraday trader. Then I look for entry for scalping. Okay. So you look to entry, you have your own setup. That's what you do. Somebody asks you, what do you do exactly? What do you mean by option trading? Beautiful responses, guys. I must tell you, if I ask two people the same question, both of them will give me different answer. If I ask 10 people, then all 10 will give me different answer. If I ask 5, all 5 will give me different answer. This is where the problem is. If you ask a bunch of doctors, right? If you ask them, what do you do for living? All will tell you almost the same answer, that we diagnose the disease and after that we treat the disease. All of them, or we try to treat it, we try to give medicine, etc. Right? That's what doctors will tell you. If you go to a construction site, you ask a civil engineers, a bunch of them, right? You will find it in any government construction site. You ask them, what do you do? All of them will tell you the same answer in different way of saying that we are trying to build a foundation of this flyover, and then we are trying to, have this with this much inclination, etc. Everybody is going to give you same answer. If you are a software engineer and you're listening to me, tell me, if I ask this, what do you do for a living? If I ask your team of you, all of you will say the same thing, right? Either you're a coder, either you're something else. You're going to tell the same thing. But in option trading, if I ask this question, all option traders give me different answer, more or less. This is the big problem. But not after a few minutes, I'll tell you. Okay. Now, as an option trading, this is a golden word which you must know, which I am going to tell you now. There are so many concepts exist. Open interest, PCR, this, that. There are hundreds and hundreds and thousands of concepts. 100 books are written. Thousands and millions of videos are there. Everybody talk about different things. Look at that, look at this, to make money, look at this. Stop that right now. I'm going to give you total clarity. There is only one way to make money in trading. What is trading? Trading means it's a business. Suppose if I sell this phone, right? If I sell this into a market, somebody will buy it, right? So if I'm a good seller, then I'm a trader. I am a businessman of that this particular phone, for example. In option trading, what are you doing? You are buying and selling options contract. Okay. So only one way to make money in trading, in business, any business in the world, that is not open interest, not fluff, no gas. That is, you buy low and you sell high. That is it. If you know this, then you stand to make high amount of ROI. Your financial life will be much sorted if you fix this alone. That's it. Just like gravity is not a rule, gravity is a law. Whether you agree to this, whether you don't agree to this, it's applicable on you at all times. Same way, this is a law of finance, of making money. It's a law. We agree, whether we don't know, doesn't matter. It's applicable on you. Till the time you don't know the thing which you are buying is cheaper, or we can also sell as well, right? Till the time you don't know that this is cheaper, there is no money to be made. The time you know that this option contract, for example, this one, 20,500 option is selling expensive, you will sell it, right? You will sell this for sure, because you are a businessman after all. It's a real dharma, it's a real karma of doing any business in the world, to know the real pricing of what you're trading at. I ask you one thing. If you come to know that this 20,000 put is selling very cheap, would you buy it? Or would you think of selling it? Please type in the chat box and confirm me this. Is it making 100% crystal clear sense? Can anybody in the world challenge us here? This is the real satya, the real truth of the market. Real truth. There are 100 concepts exist because you never reach this truth. This is the truth, the real naked truth, right? Is it clear? Will you buy this? You will buy this. If you come to know that, you will buy. 100% you will buy. Why? Because you are businessman after all. Trader is not it doesn't come from different planet. He's a businessman. Trader means he's a businessman, and we are into business of buying and selling contract. We must know the contract which we are buying and selling. We must know the value, the hidden value behind it. If you come to know, job is done. That's it. Clear? So far this funda is absolutely clear to you. Now, how would you know? How would you know that this is cheap or this is expensive? How would you know that, right? I'll tell you. That will be told by VIX. Now, a lot of people say that VIX, you do definition of it, you Google it, you read 10 books about it. All the books are going to tell you one thing, that VIX is a volatility index. The name is also kept VIX, that full form is volatility index. That's what it means basically, right? Absolutely incorrect. VIX does not really tells you volatility. It's surprise to many, many people. I've yet to meet one person who interpret VIX the way I do. Because from where the knowledge come from, it come from the books. Books get converted into articles, articles get converted into videos. That's how. But the source of information is incorrect. VIX, if I ask all of you, you will say it's a volatility index, right? We don't question things. We must know that the fundas exist in the market so that you never able to make money. I never able to. That's the main thing. So we got to decode this. VIX is not really not really, it can be to a certain extent, but not really a volatility index, right? I want to prove that to you, right? Why don't I prove that? If I prove that, that will be 100% sure shot in your own way. Just give me 1 second, right? Now, I'll really shake your fundas of the market, right? You see this? What do you see? You see that volatility is coming down. You see October series 2022, you see volatility is coming down. What is volatility? Volatility means market is going up, down like crazy, and now the market is from violent, market is getting silent, right? It's getting more, subdued, more relaxed. That's what VIX is telling you, right? Looking at the chart, it's a volatility index, right? All of you know, you read a lot of books, you know it, but stock market runs completely opposite of what's written in the book. I'll show you now. You see October 22, you see October 22 here. What's happening, guys? Volatility, instead of going down, volatility is expanding. As you can see, there has been gap downs, there has been gap breakouts, all sort of action is happening. But VIX is telling you, no, volatility is reducing. Complete opposite of what's happening in the market. Completely opposite. Right? It's just that we do not question things, and we based our trading based on this, as you can see very well. Right? So this is not a volatility index. That's number one. Number two, what did you learn so far? You learned a couple of things. Number one, you learned is that the only way to be successful in any trading, be it options, be it anything, is that you buy low and you sell high. That's the real satya of the market. We will reach the truth together, you and me. And then we realize that the funda which is mentioned in the books is completely different of that happens in the market. Now I will tell you, how do you know that it's time for you to buy or it's time for you to sell? Very, very important. And why we've been getting the consistency which we are getting. How do we enjoy it? I'll tell you. VIX has one very important purpose as well. And that is, VIX tells you whether the pricing of option is incorrect, is expensive, or is it cheap. That's exactly what VIX tells you. Okay. Now people have this fundas again that above 17 is high VIX, below 10, below 12 is low VIX. That funda is completely flawed. I'm going to give you a better method. What you see, this black line here, this black line is a simple moving average of 20. 20, why? Is it some magic number? No, it's not, because there are 20 trading days in a month. So 20 moving average means it's a monthly moving average. Now, me as a good, strong businessman who want to sell option when the pricing is correct, I want to sell option when my premiums are higher. I know this, right? So I'm most interested to sell, to create a selling option strategy when the premium, when the VIX is significantly above the moving average, monthly moving average. That means I'm selling option when the premium is really high. So I'm going to mark few zones for you, right? And you will see how these things play out. So these are my areas of selling. Selling what? Selling options. Selling means credit strategies. Maybe straddle, maybe strangle, maybe jade lizard, maybe jeep. What are these? Maybe call ladder, put ladder, maybe my condors, maybe my ratio, maybe my double ratio, maybe my broken wing ironfly. What are these? These are all credit strategies. Now I want to sell my credit strategies when the VIX is significantly up. Now I want you to become like a jasus, become like Sherlock Holmes and see something happening in the screen at all times. Every screen is telling you something. Are you listening to the screen? Something very special is happening almost every single time. Who can guess what's happening? You need a trained eye to see this, right? What is happening every single time? Every time the VIX shoots up, every time VIX shoots up, something is happening. This is not by chance. This is by design. Something really incredible is waiting for you now. Something is happening after every time. What is it happening? I'll tell you. Whenever the VIX is up, whenever the VIX is shooting up, VIX is crashing down every time. Crashing down every time. This is not a mean revision. VIX is practically crashing. It goes up and it crashes down, goes up, crash down, goes up, crash down. And it's happening every single time. Go up, crash down. I mean, it went up, you know what's going to happen now next, in next few days, right? You know why this is happening? Now listen to this very carefully. This is completely off the books. VIX crashed down every single time. It's not because of mean revision. VIX crashed down every single time because all these market makers, these mutual funds, these BlackRock, all these big shots who rule the market, they are the king emperor of the market. They sell options because of their selling in option. VIX go down. VIX don't go down by the volatility. That's for public to know. But you know better. VIX shoots up, that means premium is high. From a business point, it makes sense to sell now. Do you think I know this and now you know this? Don't you think these mutual fund guys know this? They know this. They are driving their Ferrari and Lamborghinis not because they are more smarter. It's because they have more knowledge than us. And this is the knowledge. So we sell with them. Who are them? Them are the funds who control the world economy. They sell this. When we sell with them, or in other words, when we sell, when the premiums are really high, when we sell, our chances to make money go infinitely higher. That's how we get consistency in the market. Clear? I want to repeat that again. In options trading, in any trading, stock trading, commodity, doesn't matter. There is only one way to make money, the real Satya. What is the real Satya? The Satya is that pricing is God, right? You must know the pricing which you are selling. Is it expensive or is it cheap? That is the real Satya. That's the only way to make money. Only and only way, in my opinion. If you're just trading randomly, you don't know the price, the option which you're selling, is it cheaper or, oh, I'm just doing iron flies. That's the reason why people get unsuccessful in this. But if you reach this truth, congratulations. Big part of your trading journey I've covered now. Years of it. That is number one. Number two, now this problem we have now, how to find solution of it. Solution is this, that everybody look at Nifty chart before entering any strategy. We do not look at Nifty chart alone. We look at VIX chart. And in VIX, we enter when VIX shoots up significantly. And then we do entry. Because when VIX shoots up, this is the zone of sharks. They will come and they will hammer the premium down. So premium, which is around 100, in no time it will become 70, 50, 60, right? And when we enter it with them, it becomes much better for us to make money really quickly, and we come out of our trade in profit almost every single time, like I've showed you. Absolutely clear? Is it absolutely 100% clear to you, the concept which I told you? Absolutely correct, sir. Was really not expecting this. Obviously, you were not expecting this, right? Nobody was expecting this. And this concept is going to be helpful for you, not just in this strategy, in your entire trading. Do you realize what you learned just now? Is it clear? Absolutely clear? Yes. Good job. Absolutely clear. Good. 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 Excellent. Absolutely. So that's a real truth. When you base your business on the real satya, जिसको कोई हिला नहीं सकता, nobody can shake that, then you stand chance to make good amount of money. And I'm not talking about small. I'm talking about building businesses, your side businesses based on the truth. Forget about all this noise. Reach the real matter. So now the concept part is clear to you. Now we'll go with the strategy, and we will have the strategy, which will have the strategy now, which you will learn. But which strategy to use, how to use it, when to use it, everything else will come together now for next 30 more minutes. Okay, good job. You all been concentrating really well. Let's concentrate more next 30 minutes, and we will have a really sharp system ready for us. You only have to crack this once in your life. You remember that, only once in your entire life, and then hopefully you don't have to look back and get worried about the markets. So let's see now. Let's go ahead and let's see more. So this much is clear that we want to enter selling strategy, but the main question is which strategy to enter, because should we do strangle, straddle, what should we do? So don't worry, I will save a lot of years of you, because we have tested extensively over a 10-year-old data, right? 10-year, 10, 9, 8. So we did until recently, and we tested all the strategy. It costed a lot of money, a lot of skills, a lot of coding, a lot of time. And we figured out that we ranked all the strategies like ratios and these, flies and broken wings and jeeps and all. We tested all of them, and we ranked them. So which strategy come on top, which strategy come on bottom, etc. Straddle, naked short straddle of next month, that came as a rank 2. But when we did strategy number 1, the rank one was far above and beyond than any other strategy put together in terms of safety, in terms of everything. So I'm going to tell you that strategy itself. Basically, we're going to do credit spreads, but not the normal usual credit spreads. We're going to do credit spread with some masala. How do we do it? You got to learn now. So we start now. So concentrate. So theory part is clear. Now we'll learn how do we manage to get this kind of profit. And by the way, you're going to have full report of it in this particular Excel only. So let's open this. And now how do we do? We enter into credit strategy. Credit means we sell something and then we buy something. What do? We buy at least 45 days away. So basically, if today is, suppose, 16th of November, then I will not enter in November contract, because there has to be minimum 30 days, roughly, maximum 45 days. So I will not enter on 16th. On November contract, I will enter December contract. Very simple. So there has to be this much of gap. For 30 days, 45 days should be there. Now, when I make a credit spread, the gap between the strike should be around 200. So let me show you what do I mean. So here we go. So let's take December series. So now how do we create it? I'm selling this example. So I will buy this. Okay. If you're selling 20,500, then you will buy 20,700. There has to be gap of 200 points. Okay, I hope this is clear to you. Give me a second. That's it. And our job is done. Let me show you this. Okay, so once the VIX part is sorted, then it becomes very easy. The gap between the strikes should be 200. That's it. Last and the final. How to select the strike based on the premium difference. That is 25, 26 approximately. So very easy now. How do we know which strike to sell? Very easy. Just find out the gap between the strike should be 200. The difference between the premium should be around 25. So can we sell this? Can we sell this and buy this? No, go more lower. So I'll make one and I will show you. Okay. So can we sell this and buy this? 38, 38, 40, 50. That's fine. We can do that. So we don't have exact 26, but we have around 30. So can we sell 20,800 call and buy a 21,000 call? Gap of 200. This rule is must. This is trading at 57 and this is trading at, let's say, maybe 28.8. So let's do 30 maybe. So what do we find is the gap between the strike is 200. The difference between the premium is around 27. That is okay. We target 25. Why 27? Because 27 means 5.4% ROI. This is a shortcut. It takes around 50,000 rupees to make it, one call and one put. Basically, we are creating a condor, but not a normal condor with this calculation, which is really a sweet spot. So call side is done. Now who will do put side? You will do put side. Please tell me which strike should I sell, which strike should I buy? Can I sell this and buy 400? This is 3045. Can I sell this and buy 600? 272. Can I sell this and buy this? 62, 82, 82, 82. Okay. Can I sell this and buy this? Can I sell 19,850 and buy 19,650? Do you think it makes sense? What do you think? Can I sell 19,850 and buy 19,650? It gives me a gap of 200 and give me a premium difference of around 25. Yes? Clear? Yes, we can select that. Okay, so let's do that. Is it clear to all of you? Please comment and please tell me. Is the strike selection method absolutely clear? Please type yes. No confusion? Clear to everybody? 100% sure? Gap of 200 and premium of 26, 25. Of course, we should look for liquidity. Repeat. Please repeat. Okay. Is there a minimum requirement for distance? No, there is no minimum requirement. It should be 600 points away. No. No live market premium. Just keep. How about the live market? No, live market premium will not jump so fast. Or the money will jump 1 rupee, maybe 2 rupee. How does it matter? Please repeat. Okay, so repetition is the same thing that you sell and a buy. The gap between the strike should be 200. Is it 200 or is it no? Tell me. It's 200, right? Please type yes. The gap should be 200. Okay. Sorry, this one and this one, 200 gap. The difference between the premium is how much? 84 and 56. Is it around 25? If the answer is yes, good job, you got it. Some strike prices are no limit. That's okay, go with the round figure. That should not be an issue. How about live market? I've answered that. Requirement. Okay. Is it clear, Nikhil? Type yes if it's clear. Okay. All right. So let's do 19,850 put. And we buy 19,650 put. 850 is how much? 850 is 84. And 650 is 56.55. Good. So we got around 27 points. 27 point means 5.5% ROI. That is what we target. So strategy creation is done. Good job. Monthly expiry. Absolutely monthly expiry. No doubt about that. Good question. It will always be OTM, never be ATM. Perfect. So let's do the same thing over the chart now, and I will explain you a bit more on this and how this trick is helpful for us. You will know all that. Okay. Once we see VIX, then we create the strategy and the 20,800. Give me a second. Here we go. $29.50. $19,650. $21,000. And this is the expiry, 28th. So basically what I'm doing is I'm explaining you a little more deeper. Takes a little extra effort, but I think that's completely worth it as long as you get the concept in one shot. Okay, so this is the same strikes, right? Selling and buying and selling and buying. It's just a chartical representation of that. Okay, so now our strategy is done, and now we have created this based on our calculation of iron condor, and we have seen VIX. Now iron condor we do, iron condor public also do. What's the difference between our iron condor and public iron condor? The difference is of day and night, because public do iron condor trading based on, because they want to get theta decay alone, right? Theta decay we are also getting. That is not much of a concern. But you must realize that when the VIX is high, your theta decay is 1.5x. It's much faster. Sometimes it's double. So number one, understand this. When the VIX is high, our theta decay is fastest. That's number one. Number two, when VIX crashes, then we immediately gets into profit. Almost immediately, matter of a week, 10 days. If it falls, we get into profit and we close our trade. And number three, the condor adjustment, which we have, retail people have no idea about that, how safe we can go. So these 3 points make this particular strategy with the rules which we have really, really deadly. So why don't I show you now? I'll show you what happens if we follow the same rules. Adjustments will come later. The worst part is gonna come later. But suppose if we do this over and over again and don't do anything else, are we going to beat one of the best traders in the world or not? So let's see. I'm not gonna skip any peak. We will take each and every peak and let's see. Focus here, 100% focus over here now. 27th of Jan, we did this strategy. So where we go, 27th of Jan is here. Where is that? This one. Here we go. Let me mark it. Give me 1 second. We will see every peak. This is 27th of Jan. This one. So near the ending of the day, we deployed this strategy. If you're busy, you can also do it the next day. There is no problem, right? So what happened? VIX shot up really fast. Now we know it's time for us to strategy number 2. We did the same thing. We entered in February series, 200-point gap between the strikes, call side, put side, beautiful, 25 points difference approximately, and we entered on 27th We exit on 20th of February. On the call side, we made 4.6% ROI. On the put side, we made 5% ROI. Net average ROI, we made around 4.8%. Trading this with almost zero screen time. Let's move ahead. We're not gonna skip any spike. Every spike will take. 26th December is here, is over here, this one, right? VIX moved up. You can do entry on 25th, 23rd, you can do entry 26th. It does not matter at all. As long as your VIX is high, the god of trading, the price is with you, right? That's the power which you have. And 26th December, we did the same thing. We entered in January series, obviously. As per the rule, there is no compromise on the rule. It took us a hell lot of capital to make this rule, and you're getting it ready-made. Sell this, buy this 200-point gap, same premium difference. It will remain unchanged. How much margin we pay? 50,000 total, approximately. And how much ROI we made? In 20 days, we make around 4% ROI. That's good. Let's move on more. 26 September, what happened? 26 September, we have this peak as well. We'll cover that. Maybe it will come later. 26 September is here. We see that it has crossed all the peak. It's a new Burj Khalifa here, right? So we're going to enter here, right? Why are we entering? We know that sooner or later, all these insiders, these people who run the markets, these big boys, they will come and they will sell, because these tricks, we caught them. They can fool us as much as they want by giving us fake information about news. People tell them Nifty is bullish, and next day you see Nifty is going bearish. But this is a real truth of the market, and we do not listen to them and trade. We use our own experience. 26 September, we traded this. We sold, we bought. Now, again, the same thing. In 2 weeks' time, how much? 2 weeks' time, we made around 2.99%. Around 3% return in 2 points, right? Now, let's move ahead. What else? Now, you see, you have 12th of May. Now, what happened in May 12th? Let's figure out. 12th of May, it's over here. Very good example. Very, very good example. Now, VIX was here. Grab the concept really nicely. What happened after this? You tell me, right? So, VIX went up, right? VIX went a little up. That is absolutely fine, right? VIX went up a little more. That's okay. VIX we are not trying to predict where the VIX is going to go. We are not in a business of that. So VIX can go up. That's absolutely fine. So we entered here. It's just gonna take slightly longer. So 12th of May, we took around 1 month. And how much we made? We made around 3.8% ROI net without the need of adjustment. So far, all back to back. Right. That's the power of this particular concept has. Now, there is one more trick I can share with you by which your profit can go double. Right. That's a big bonus. But let's see if I'm in a mood to give you or not. You want that? I'll give you in private then. Who else want the bonus? I think 4% is fine, no? Why do you want to double it? Thank you for your kind words. I mean, this will boost your morale. How's the Josh? High? Josh will be even more higher. If you take everything from me, then what will I have? Okay. You tell me, please. It's not fair, no? I should increase the fee? Okay. No, I'm kidding. Okay. But if you book profit, will you remember me or not? You tell me. When you're booking profit all alone, and when you're showing off to your friends and all that, how good you are, in that situation, will you remember me? Okay. I'll share with you now, okay? Mentors always remember. Thank you very much. So good to know that. Even I have deep respect for people who taught me really, really well this point of query. Okay, I'll respond to the query later. Let me explain you first. Then I will read. Okay, perfect. So So far we sold and we buy 1-1, right? You want to increase your ROI. What if I sell 2 and buy 1? I sell more, 1 lot extra of call and 1 lot extra of put. Do you know what will happen? Any idea? I'll show you. You see this Excel cell which is hidden? It is hidden on a purpose because I wanted to show you this. Same price, 108.80, same thing, 108.80, everything same. You're gonna get the same file. And when we sell 2-1, then what will happen is that then we on the call side we made 8%. On the put side, we made 9%. Average ROI is 8.88% when we sell 2 and buy 1. So it's gone up from 3.8% to 8.88% in 1 month. Clear? Absolutely clear or not? Yes? Okay, so you can always sell double, but remember your risk go up when you sell it. So let's go more. Let's see more. 16th of June. 16th of June is here. VIX was up. We did the same thing. Right? Now, we didn't enter here. We entered actually here. Right? You will see this. And what happened? We sold, we bought. And what happened? Sold, buy, and then around a month's time, we made around 2.9%. Solid ROI, sticking to the same rules. So far, there was no adjustment required. Right? There is nothing more powerful than this I have ever come across in my life. So far, there are more tricks, obviously, but this is really deadly. So when you sell 2, you buy 1, you make 7.9% return. 2.9. Remember, with giving 0 screen time, with no adjustment whatsoever. Right? Who says learning takes you places? Nothing else. 22nd of Feb is here. Now it's gonna be. This is here. Now you see this was a war. We do not take Condor. We don't take this trade during elections. We don't trade during war. Please remember that. So election is here. We never took this trade because elections and war, anything can happen. Right? Usual standard concept don't work. But elections not happening every month, right? It's once in years. And war as well. War is not happening every month. So here we go. 22nd of Feb we entered now. It went from 22nd Feb to, it went up, even up. Does it matter? Maybe you have to wait longer, but your ROI never changes. Same 3.37. And here also we made around 6.5% if you go aggressive. Beautiful, isn't it? Right. What else do we want from trading? From the business which is taking care of itself. 24th of Jan. You see, every peak, we didn't miss even a single peak. Now here, boom. What happened? This is what happened. Call side this much, net 3.8. And when we sell double, we made 6.75% ROI. Really, really nice. Right. There are more examples and there are more examples and there are more examples. End result is this, that we made this much percent of ROI. All back to back. One trade went into break even, quite a recent trade. So that is also fine because I'm going to tell you adjustments now. So you see, what do you think will happen here? Now imagine yourself, you are in an office, right? You're busy, you're working. Now you have some savings and you want to deploy this strategy. Now imagine when the VIX is here, significantly up. Look at very closely. And suppose if you miss the entry, can't you do entry next day? You definitely can. It's your business after all, and you are running it. You're running the show. And if you miss it, you can do next day entry. So it's giving you the window of trading in matter of days. You can enter, right? Here as well. Enter here, whatever. But as long as VIX is significantly up, please remember that word, right? What do you think will happen here, right? Very nice. What do you think happened over here? Any idea what happened here? We made crazy amount of money. Really, really good. Now here the elections came, we didn't do entry. But normally there is no issue. We can do entry very, very smoothly. Like a, yeah. Perfect. So far, is it clear? Now we're gonna go to adjustment part of it. What if things go wrong? But so far, is the concept, the strategy, why are we getting into profit, is it absolutely clear? Okay, perfect. So how to do exit? Basically, somebody is asking how to do exit. When do we exit? It's very simple. Suppose that we are making around 4.8. So it takes 50,000 rupees only to make it. I mean, right? I mean, with 5 lakh, you can have 10 lots, 10 sets. So what you can do is probably when you get 2%, 2.5% out of 10, you book 3. Then again, you book 3 more, and then they leave the rest 3 for later. That's how you can pyramid exit. Very simple, very simple pyramid exit. I mean, you don't enter together and you don't exit together. That is not a smart thing to do. So just keep entering, exit. Quite simple, clear, 100% clear. The clarity which I got. Thank you very much. Very nice. There are a lot of trades, Anju. That's not an issue. Reduce your time frame if you want to get more trades. That is okay. And have you counted their 6? Are you sure? Okay. In case of explosive, yeah, adjustment is coming now. That's not a problem. Understand it, like when we sell it huge, ROI increases. That is correct, absolutely correct. When you sell additional lot, your ROI increases and your risk as well. I'm going to tell you what to do. Margin will, of course, margin will increase, and so does the ROI. Amazing, great. Okay. Okay. Sorry, actually, my should start my trade. Yeah, that's correct. Right. So when the VIX is up, I mean, when you trade in reality, no, when you just trade once, then any of your doubt will. I mean, just look at this. Will any trader here who's looking at the screen, getting trained, will have. These are daily candles. This is not 1 minute candle, no. So will you have any issue entering? I don't think so. No, it has plenty of time. Yeah, I got to train your eyes to see. Nobody can tell you that this is. We can't say that, but you can use Bollinger Band if you want to see. 1 second. I mean, if this helps you, Bollinger Band you put in, this can also be helpful for you in the beginning. Fine. So when it's above it, then you can look to do. But I do it normally. But if you want to use Bollinger, you can in the beginning, and after that, it will become second nature to you. Perfect, guys. So far good. All good. Hardly any questions. Very good. Everything is crystal clear to everybody, right? So far the things are clear to you and you got the concept. So congratulations. You really have saved a lot of years of yours with getting this particular concept on when to sell option, which is completely opposite to book. Do you think reaching this level of knowledge for a trader all by himself, can he reach? I must tell you one thing, reaching here alone all by himself, watching a lot of videos and getting confused on the way, it's may at least take 5 years, maybe more. And even after 5 years, there is no guarantee that he's gonna crack this, what we've been able to crack. So, and you get this ready-made. So value it equally, that you put in so many years. Think like that, so you value it even more. Okay, now we're gonna go to adjustments and we're gonna do a lot more. No way. Absolutely, Manju, that's correct. No way is gonna reach this level of knowledge. No way, no way. First Saraswati and then Lakshmi follows. Here, what people try to do is chase the Lakshmi. And you know what? If you just chase money, what happens? You chase anything in life, it goes further away. So chase knowledge. Money becomes, that's getting profitable in the market is not a difficult job at all. 95% people loses because they want to do 10 trades in a day, right? That's the greed which kills, nothing else. If you have a process and a solid, if your trading is based on real satya, then things start to work out for you in your favor. Perfect. So now the last piece of information is, how do we adjust? I'm sure you would like to know. So far things are going fine, but what if things go wrong? Then what do we do? So we're gonna discuss that. So suppose if we take the trade and market start to go down and market go down to 19,000, whatever the strike price is, right? If market go down here, then what do we do? What is the adjustment point is? Adjustment point is always near the sold strike. So we don't want 19,850 to get penetrated. So we're gonna adjust here. So let's see what will happen if market come here. So suppose market go to 19,850. In this situation, the call side will be in profits. Maybe this is 18, maybe this is 16, whatever. So we're gonna make some amount of money, maybe 5%, example. Put side will be in loss. How much will be in loss? Maybe if it's 6%, then net it's only 1%, right? Which we have to recover. Suppose the put side is even more loss. Suppose put side is 10%. Then 10% means what? 10% means you have to recover 5%. This is what it means. Or maybe 11%. Then you have to recover 6%, more or less, right? The best part is mathematically, at the initial of the trade, it is impossible to get us more than 15% loss. It's impossible mathematically at the beginning of the trade. That's what maths is telling us. But in real situation, the loss will be lesser because when it touches ATM, then you have to adjust. And suppose at that time you're getting net loss of 6% over your total capital. So now you have to recover 6%. How much? 6% is what you have to recover. That's it. That's the only worry you have, right? There's no problem. We'll tackle it now. So we'll recover this. I'll give you the adjustment. Now, Condor, I can adjust with at least 10, 12 different ways. But I'm sure you don't want 10, 12 ways because you don't have to give any exam to someone. So today I'll give you the second best way to adjust because the first best way I'm going to keep it to myself. Okay? I hope it's fine. You guys won't mind, right? So today I'll give you the second best way to adjust. No? You want the best? Are you sure? But I have one condition if you want the best. That you'll be ready for the test. You'll be able to handle the best adjustment. The end of adjustment. Khatam ho jayega wahan pe adjustment. Right? The end of it. The end of tension. Gone. But I won't give you just like that. If I ask you a question about adjustment, will you answer me? Sure? 100%? If I take your test immediately after this, I can give you simple adjustment, like very simple, but that won't be very effective. But you want the best. Everybody wants it. Okay, great. Good. So it's time to adjust now, okay? Because you said that you're ready for test, I'm going to open any random mic and I will ask you that. Okay? The adjustment which I'm going to show you, let's understand it now. Okay. Now see, how much you have to recover? 6%. That's it, right? Now, main play, the main skill starts now. How do we protect? Because if strategy and the logic is that strong, the adjustment has to be equally strong. Now, Excel I will send you is written over here. Step number one, book your Condor totally. This Condor which you have, you book it and you take a hit of 6%. Condor is booked. Capital is free. Step number one is clarity. Next is what? We're going to do three things. Number one, roll down the challenge side and make a new put spread. So what do I mean? This put spread, 200-point gap, I can roll down only the put, only the put, and I can make a new put spread over here, right over here. So let me show you this. This is maybe 18,600. Sell, and then what do we buy? We buy 200 points down, 18,400. See how the adjustment is done. How we do it with Total Pro. You see, first step is this. This is roll down. What do we do? Step number one, roll down only the challenge side, only the put. Okay. Step number two, double down, means double the quantity. So what does it mean? Let me write down here. 2x the original quantity. What do you mean? Suppose if Condor you made with 4 lots, 4 by 4 cell, now you are rolling down the put with the same 200 point gap, but now you're doing it with 8 lots. Why 8? Because 4 multiplied by 2 is equal to 8. If you're doing it with 10 lots, you do with 20 lots. If you do with 1 lot, now the new position you are making with 2 lots. Beautiful thing is that you don't take extra margin when you do this with the same margin. That's the best part. And last but not the least, the best part is step number 3, the above 2 steps in next month, next series. Very simple. So I'm going to give you a recap now. We made losses, 6% loss. Suppose if we, first of all, it's very difficult to get us into losses. You all realize it because of VIX. If we get challenged, and suppose if we have 6% to recover, there is no problem. Number 1, you close your Condor totally. Your Condor is done. Your Condor is closed. After that, you will bring a new put spread. You will go down. You will make new put spread, which has 200 point gap. And you will do with double the quantity of original trade which you have, right? Which will require same amount of capital. And you will do above 2 steps in the next month. That's it. The job is done. Congratulations. You've done the adjustments very nicely. Now, 3 things which you notice. Number 1, it will not require extra margin, more or less same margin you can do. Number 2, you are not doing the delta adjustment, which is total failure. You're not doing that. And number 3, the most important, your adjustment also have hedging. You see this? The put which you buy, this should give you a lot of mental comfort. In other words, to get us into 1 rupee loss, how much? 1 single rupee. The entire Indian stock market has to crash one way in one side without retracing and touching that point. Only in that situation I'm going to have some amount of loss, but even then I'm not having any unlimited loss scenario because I have bought the put as well. This is called the real safety and the total next level adjustment. When we do this, we get this. And by the way, if you go back, if you see Corona times, although Corona is not a good example, thing which happens once in 100 years should not be taken as a base for anything. But even in Corona time, if you see the chart, you will find that market go down and market go up, and then it go down and then it go up. You have seen Russia, Ukraine, you have seen a lot of wars. You know how stock market behaves. Market never go down up in one single shot, boom, like that. If this happens, that means a lot of people gone bankrupt because people sell naked option all the time. So that doesn't happen usually. Even if that happens, that's absolutely fine. You are hedged, you are protected. Well done, you're doing your job really, really nicely. So basically what is this? Is basically you are running your business with a lot of safety. You are aggressive. Your aggression is as strong as your defense. Your defense is also equally strong. So that's the beauty of this particular thing. Now, what do we expect? We expect that market may fall from here to here very fast, may even go down. But what do we need? We need a little retracement. I'm short with double the quantity. As soon as market retraces, my profit will come fast from double the speed. As soon as that happens, I'll close my trade, and that's it. If after a brutal fall, if you don't lose anything, congratulations, that day you become a really, really good trader, you become a really smart businessman. After 1,000 point fall, if you come out scratchless, congratulations, you have saved your business and you saved your this thing. So that is how. So this is what about the adjustment of Condor. How do you do it with 100% total clarity? Clear? Now the last point is, how do we know how many points down should you go? Should you go 1,000 points down or 2,000 points down? How would you know? Very easy. How much you have to recover? You have to recover 6%. 6% means what? 6% means 30 points. Let me show you. So basically every 5 point means 1%, as you can see. So suppose you have to recover 6%, that means 30 points. That means 30 points if you take, you recover 6%. That means here, if the difference between the premium is around 30 points, 30, that is your strike. Very simple. There's no issue of any kind. I hope it's clear. I've taken 6 in real life example. It is bound to be lesser. Suppose you have to recover 2%. Now 2% means 10 points. That means the option chain will end. It will be the last 2 strikes. You pick that, and that will be your strike. So if you have to recover 2%, that means your strike will be here somewhere. So you can go here, literally, really down. So that is how you can trade it with a lot of comfort. I hope it's absolutely clear to you. I hope, Anju, I answered your question. Right, same question, Singh, I think I've answered to you. Yeah, same. Great. Is it clear? Should I ask question now? Absolutely clear? Sure? Now, if I have a question for you now. Ready? Let's see who answers it. Market is going down, right? Market is going down. Why don't I sell a call, naked call? Don't I want free income? Twister, no? Googly, reverse swinging question. Market is falling because I know this mistake you will do. I won't let you make this mistake. Yeah, it can retrace back. What else? Excellent, Singh. Very good. Amazing. Good. This group is good today. Very good. Very good. So basically, this is what retail do. They sell a call. Market is falling, no, sell a call. If you sell a call, you pay higher margin. That's number 1. Number 2, you sell a call, that will be naked. And number 3, if market reverses now you are stuck. Completely stuck. So good job. All the answers are 100% accurate. I'm very happy to know that. Superb. I have full faith, confidence in you. Definite. You got the logic and you got the adjustment. Job is done. Good. A lot of confidence in this. Absolutely. Of course. The logic is unshakable. That's good. Good job, guys. Really well done. So let me give you a recap and then we'll go for a little break. Okay, so number 1. First, what we learned a lot of things in past 1 hour, 15 minutes. We learned a lot. You focused, and your focus gave you a lot of confidence. So what did you learn so far? You learned that what is the real truth of the market. You learned that people are looking at the wrong graph, which is Nifty. You don't need to look at Nifty alone. Go to look at VIX, because there's a hidden meaning of VIX which is not there anywhere, and we have seen the practical terms of it. So we do this and we follow the rules and we create a strategy, 200-point gap, etc. And when we do this, we can be really relaxed because it has given us good amount of accuracy. Forget about the accuracy, 0 screen time almost, and 0 adjustment so far. I mean, I'm more than happy to adjust it, but if it doesn't give me any adjustment, that's even better. Now, this is a blessing for somebody who wants to run this business alongside his job. That's really nice. So we do this, and I've also shared this trick with you because I'm in a good mood. No, I'm kidding. Okay, because I had to share with you, which is here, that if you sell extra call, extra put, your ROI really shoots up, right? Really shoots up. And after this, once I have your Excel, you will see this to yourself when you test it. And when you test it, you will contact me again that you want to learn more. That's what happens 90% of the time, right? Because when you see it from your own eyes, you'll say, what is it even possible to do? It is possible. It's just that if people are not aware of it, doesn't mean that it doesn't exist. It exists. And there are people who are making absolutely killing out of it. So that is how. So far is good. After that, we learned adjustment. What do we do in adjustment? We close our condor. We roll down the put, the challenge side only. We roll down challenge side, double the quantity next month. Very easy. Close the condor, roll down the put, double the quantity next month. Simple. And our adjustment is done. That's it, guys. Perfect. So that's it. We'll take a break now for 10 minutes. Strategy number 3 will not take much time, maybe 20 minutes, and then we'll be done with this. Okay, and then if you have any questions, you can get in touch. Right, guys? So that is about strategy number 2. And please don't underestimate that this strategy is only for condors. Any credit strategy will be quite useful for this. We can definitely put this into good use. Okay, so here we go, timer for 10 minutes, and then we come back, and please take a screenshot of this if you want to. Okay, 10 minutes, and we come back after the break. Stay away from the screen, stay away from looking at your phone, come back, and we do strategy number 3. Very easy to learn strategy number 3. Here we go. Thank you. Take a screenshot if you want.